Welcome to the REI Diamond Interview, your source for real estate investment jewels of wisdom with Dan Breslin.
Welcome to the REI Diamond Show. I'm Dan Breslin, host of the REI Diamond Show, and each week I normally invite another high-caliber performer to share their unique experience as it relates to real estate investing. But this episode is going to be a little bit different. I'm going to take a temporary departure from the expert interview, and on this show, there will be no guest. Instead, I'm going to share with you a few lessons I've learned and habits and thought processes I've developed to build my real estate business up to this point. I will stick to the script and follow the usual process, so I'll begin with my usual introductory question before I get into the 8 jewels of wisdom learned from 400 deals, which I will begin sharing with you. So I'll talk about first how I got started in real estate investing. Back in 2006, I was without a job, without a car, had bad credit, was living back at my mom's house at the age of 26 years old. My dad had heard on the radio a advertisement for the Get Rich in Real Estate seminar, which we subsequently went to and found out that it was $1,000 to actually get the real information, on a 2-day weekend seminar. I'd pretty much given up hope on that. My dad was the type growing up that, we would have to forego the ice cream and we wouldn't get to play the games at the boardwalk and things of that nature. There just wasn't a lot of extra cash growing up. So I figured, okay, well, that's that. I'm going to have to find a different way to get into real estate. Dad surprised me, pulled out the credit card, went to the back, bought the weekend seminar, and away we went. A couple months later, a couple books, was advertising and had done a 7-day ad with like my last $100 in the newspaper. And on day 6 of the 7-day ad, I get a call for a property in Chester, which is a very low priced section right outside of Philadelphia. They really didn't have an asking price. When I went out to look at the property, I didn't have a car, so I had my dad give me a ride to that first deal. And my daughter was in town from Chicago. This is when I was living in Philadelphia area there. My daughter was in town. I had nobody to watch my daughter, so I brought my daughter along with me to the Sun Village section of Chester. And we, all this 3 generations of Breslin shows up at the first We Buy Houses appointment in Chester. And there's 3 generations of the family, the seller, who are also at the house. And we get inside and the place needs a rehab and it's a really rough block. There's, several board ups or vacants. There wasn't much drug activity out there on the block, but it was also maybe 11:30 a.m. And we get inside and my daughter is within the year, almost the same age as the granddaughter of the seller. The seller's daughter and son-in-law were there, and obviously the seller, she was an older woman. Her husband had just passed away, and it was time for her to come live, with her daughter's family. And they had no idea that she was living in such condition of the house. I mean, it was deteriorated, holes in the wall from the leaking pipes on the bathroom second floor. They were horrified and shocked because whenever the family would do the visits, they never went to Grandma and Grandpa's house. They always came to the daughter's house. So they kind of see what she's living in and put the foot down and she's going to go live with them and get out of that area. So I really didn't have much knowledge of the market or know how bad things were. I did like a quick Zillow search and some public record searches through RealQuest at the time, which was a $200 a month version of the MLS in 2006. And I came up with an offer price of $5,500 because I saw on Remington Street, right around the corner, that a friend of mine I'd met at a networking event had purchased a property for $6,000. So I did the quick math on my fingers in my head, and I thought, well, if we can get a contract on this deal for $5,500, I'm sure he'll buy this one for $6,000, just like he bought the one around the corner. And they end up agreeing to the $5,500. I never filled out a contract, never decided to practice that, ahead of time. So the first one I ever filled out was right there at the kitchen table of the seller. I leave that house ecstatic to have that first contract, but not sure what to do next. I call my friend who had that $6,000 property. He basically says, listen, I'll give you mine for $5,500. Nobody's going to buy anything in that neighborhood. Mine's on Remington Street, and that's because they found Remington shell casings around the body on my front steps. And I'm like, oh, great. I just signed up like, absolutely the worst deal in the worst neighborhood. Nobody's going to want it. Undeterred, I have my contract, so I still continue working on the contract. I call some people, friends and family, and try to raise the money, because my main goal of getting into the real estate business was to fix and flip houses, not necessarily wholesale properties, which ended up, getting to be, for those of you listening, a big portion of my business today, in addition to the fix and flip. So I tried to raise the money unsuccessfully. Apparently everybody who was of my dad's generation, older, and had actually saved money up, knew about the condition of the market in Chester, especially in this section of Chester, and nobody wanted to touch the deal. And thank God they didn't, because I didn't know what I would have been getting myself into. It's not the kind of neighborhood you can sell property. The person I sold it to fixed it up, ended up selling them all off at a loss in the end anyway. But things were different at that point. So after I failed at raising the money to do the renovation, I put Craigslist ads up. The market was hot. At the time, Chester, the city, had a casino coming, and everybody had high hopes. So there were a lot more buyers there than there are today for properties like this. I end up finding a buyer for $11,500, and with that, I had done my first deal, was in the business, kept that newspaper ad running up until this very day. That ad is still running. It's nowhere near as effective today as it was back in 2006 when more people actually read the newspaper. But that $6,000 check was life-changing for me. It was the most amount of money I had ever made in such a short span of time. Even if it was, even if I was to count the time, the 3 weeks that I worked on the deal, or like, the 6 to 10 hours or so that I had actually, made phone calls, traveled to the property, put up a couple ads. I mean, it was not, a time for dollars equation. It was an astronomical amount of money for me at the time. And I did the smart thing. I reinvested that money in the marketing, and I ended up finding a second deal and a third deal. And by the fourth deal, I had linked up with a partner of mine, and we closed on, this would be my first fix and flip, deal number 4, I think it was. Deal number 5 and 6 were also fix and flip. So this was kind of how I got into the business, which brings me to the first jewel of wisdom that I'd like to share. And this is probably one of the most critical lessons I've learned, or by default figured out. Number 1, for me in my business, is I had to become a source of deals. And for those of you that have been around for any length of time, read my book, read any of the guides that I publish when you join the buyers list and things of that nature, you know that I'm a humongous advocate of becoming a source of deals. And this is critical for somebody that's following my path to get into the business. And that path was that I had no money. I had no credit. I had no job. I didn't even have a car. Thank God I had family and I could stay at my mom's house, and I had a dad who was, giving me a ride to the deal at the time. But, for people looking at what Diamond Equity Investments is today, compared to how it was when I started in this business, like I had no money whatsoever. And the only thing that I could do to get into the business was either find somebody with a lot of money who had the confidence to back me up and invest in my deals, which I did eventually find that, but I only found that by becoming a source of deals first. So in a sense, my first deal I did to somebody completely new, the buyer completely outside of my circle of influence. Deal number 2 I had done, again, it was an outside buyer, it was somebody I hadn't been dealing with. And then deal number 3, so I'm digging these deals up, and they're all coming from that newspaper ad at the time. And I was like slowly building an online presence. This is in 2006. If you've checked out my website, you know that Diamond Equity Investments, I personally still build and maintain that site and do the SEO work and manage the Google pay-per-click campaigns, et cetera. And it was back in 2006 that I began to put these pieces together and start to develop, the online marketing channel of my deal source. But in 2006, the first four or five deals, I believe, came from that $250 a month newspaper ad. So by the third deal, I go to the ring meeting. Today, I actually run a ring meeting in Chicago, and I run a ring meeting in Philadelphia once per month, and you can check those out. I'll make sure I include that information if you have not checked out these networking events. They're powerful. And the reason the ring meeting is so powerful is you're meeting other players and other people in the market. So I had been invited to my first ring meeting in 2006 by a gentleman that I still do business with to this day. And he had introduced me around, and I remember hearing a lot of people were doing a lot of deals. You know, I knew he was buying, and he was relatively new in the business. He was in the business at the time, maybe 2 or 3 years, maybe even a year or two at that point when we met. And he didn't necessarily take me under his wing. I mean, he had taught me a few things, but he wasn't able to show me how to become the source of deals, which is where my value comes into play. But deal number 3 was at a ring meeting. I had done 2 deals. They were waiting to settle. We're at the ring meeting. This gentleman comes up and he says to me, he says, "Dan, you got any deals working?" And I'm like, "No, this guy has like this burned out house in Chester. Like, what the hell am I going to do with that?" And he's like, he scratches his chin and like tilts his head and looks down and says, "I think I have a buyer for that." And I think it was 3 weeks later, and like $16,000 assignment fee. We had done our first deal together, and then deal number 4 he had bought from me, and I guess it was deal number 5 was the one we'd flipped together. The same gentleman became a lender to me, so he ended up lending me money on, you know, my first fix and flip, second fix and flip. You know, all this took place within a 4-month period. But the reason I was able to make that introduction and become somebody that he wanted to deal with was because I was bringing around deals, I was bringing around addresses. And if you read, you know, Become a Wholesale Real Estate Master, the book I wrote, you already know that this is how it unfolded for me, being the source of deals. Even to this day, you know, in 2008, 2009, 2010, you know, when the market crashed, I kind of picked up. I was doing contracting work, things like that, just to keep the bills paid. It got to a point where everybody that I knew had been humbled. We had all lost money on flips. I was at a point where I probably should have gone bankrupt and did not at that time. And I didn't have any deals. And, you know, it was funny. It's like even to this day, people, you know, I have the podcast and I'm doing my best to promote, have the ring meeting, and it costs me money and it takes a lot of effort to put these things on. And if I had no deals, if I had no source of deals, I would not be able to sustain. I wouldn't be able to keep, you know, the machine going. There wouldn't be a ring meeting. There wouldn't be anybody they wouldn't call me back. There's no reason for, you know, me to like be in the business if I don't have deals to bring to the table. That's my source of value. That's what I bring to the table. Dan Breslin's known for bringing deals to the table, whether that's fix and flip deals that my partners and I buy, fix and sell, or whether that's wholesale deals on land, on, you know, single family houses. Typically, this is where I bring value to my marketplace in Chicago, Philadelphia, and the Tampa Bay area. So, you know, number 1 is become a source of deals. And on the flip side of that, this is for me personally. I know there's some other people who are a little more successful at this, but I'm kind of like an anti-co-wholesaling as a strategy. I'll explain what I mean. So co-wholesaling basically means you take a list. So, you know, if you're listening to this, you probably get emails from me through one of my deal websites each week, probably a lot of times a week. I'm adjusting that so I won't send as many emails going forward. But those deals are deals that I generated through my lead sources, and then my team and I together went to the living room, negotiate the deal, sign the deal up, and we have control over that deal. So although there may be other partners of mine that anybody might talk to on those deals, those are in-house deals. You know, we don't like network with every wholesaler and try to get every wholesaler's inventory and send that all out to our list. Now, on the flip side, a lot of people with permission and without permission just send our deals out. So there's people, I don't even know their name. They're forwarding my email and to other people. And sometimes they're trying to mark it up for a higher price, and sometimes they're sending it out at the same price. And other times people try to approach our company and say, "Oh, we want to, you know, send out your wholesale deal. What do you have the contract price for? Because, you know, we're going to split the deal with you." And co-wholesaling typically is like to try to sell other people's inventory and then split the assignment fee. Well, a lot of people think that they deserve half of the assignment fee, no matter how good of a deal that is on the front end, for bringing a buyer to the table. Typically, on my deals, there's a very select number of people who will co-wholesale my deals and who will get a portion or a percentage or some kind of payment from my fee. But the way that we view our business when it comes to a co-wholesale is, you're bringing a buyer. So that's kind of like a buyer agency value add. You're adding the value that an agent who represents a buyer would bring to the transaction, and that's a 2.5% or $1,000 commission on a deal. So typically, would be willingly offered to me from the other side of the table. I'm not ever going to send a deal out to my list from somebody else, especially not for $1,000, $2,000. But if I happen to know somebody that's buying a deal, a lot of times I'll just forward the email to that other buyer. I'm not even expecting anything. So I kind of don't really play the co-wholesale game. But my word of warning is if you're doing the co-wholesale thing, just remember you have no control over the deal. The contract's not in your name. So by the time you generate a buyer, a lot of times the deal already sold if it was a significantly good enough deal. If you're in the beginning of your career, you may not have the same level of market knowledge to know whether this is a deal that you should attach your name and reputation to price-wise, or whether this is something you would be embarrassed, 4 or 5 years in the business that you were trying to offer that deal for that price. And if you're co-wholesaling, you're not really a source of deals. You're really a middleman source of deals. You don't even have control over them. So it's gonna be damaging to your credibility long term. It's going to stunt the growth of the other skills, which when you master those other skills, you're going to make much more money and secure your position in the business of real estate investment. So it brings me to my second jewel of wisdom, which seems like an obvious jewel of wisdom. People might think, oh, that's not even a jewel of wisdom. That's just obvious common sense. And that's going to be the first thought as I say this. So number 2, the second lesson here is to engage in negotiation. You want to engage in negotiation. And what I mean is anytime I make this observation. So, hot deals on the MLS or even on a buyer's list sometimes are, I'll start off by saying the price is usually negotiable. These hot deals, number one, these hot deals are often done at full price or even above asking price. So when I say that, engaging in negotiation, that could mean paying more money for a property in certain cases, right? These are lessons that I've learned for myself. I've lost deals that I could have made $100,000 just by buying a property, tearing the house down, and selling off the 3 lots, and it would have made $100,000 on it. And the guy wanted like $249,000, and I offered $217 or $215, something like that. And the property just sold for full price, full asking price. It was that kind of deal. And something inside of me said that, oh, you need to just pay full price for this thing. But that's not something I've ever done after closing 400 deals in my career, throughout 3 major markets in the United States here. Paying full prices is never been my game. Even when I run into a seller who say their asking price is right there in the ballpark, I typically will err on the side of negotiating anyway. So one deal, she was asking $125,000, and I needed it for $125, give or take. I could have paid $125 and just said, you know what, that's a fair deal. Instead, I opted to make an offer of $117,500, only after waiting a day and, quote unquote, doing my number calculations did I offer $117,500, which she accepted, in order that I could give her the impression that I had to deliberate on it, and she didn't feel like, I could have got more money. That guy just took my offer. $125 was my asking price, and he just signed it right up. So I try to do my best so that there's no seller's remorse when I'm buying property directly from a seller. That's not the case if the property's listed on the MLS. I should probably make a disclaimer at this point that I've done 400 deals, only bought one from the MLS that was listed using a real estate agent, and I lost money on that deal. It's probably also important to note that I actually went to the living room of that house on the MLS with the agent and sat there for 45 minutes talking with the seller himself, building rapport and doing deals the way I've always done deals, and that's in the living room directly with the seller, person to person, getting to know that person, getting comfortable with them, and then figuring out a number or a price that worked for both of us. So 400 plus deals, I always negotiate and offer less money, even if that is a makeable deal right there, because I don't want them to think there have been other times where, not necessarily in that situation, but even when we did negotiate, there's certain situations where you'll have a seller who does not stop shopping the deal. And if they find a higher price deal, they wind up signing the deal up and selling the property, to the next investor for a higher price, which is kind of a problem, to say the least. So say you got a not so hot deal, right? We know what we did when the hot deals are at full price or even above asking price. If you have a not so hot deal, so here's something I figured out lately. Even the deals I'll send out to my list, like sometimes, we're all doing our best guess. Real estate and value, it's an opinion of the value based on the condition, and really the real estate's worth whatever the next person's willing to pay within reason, especially in the cash sale. You have a range sometimes that goes wild. And we have, from our side of the table, we try to price our property exactly how it's supposed to be priced. There's always usually a little wiggle room because all of us here, most of us in the United States, have a certain negotiation style. There's typically, we set a price, then there's an offer made, then there's a little back and forth, and somewhere down there in the middle is the actual price that both parties agree on and make the deal, and that makes a value. So we do our best here at Diamond Equity Investments to price our property at, a value that's reasonable within reason. Sometimes, we price it and we get multiple offers and someone pays higher than our asking price. More often than not, people will make offers lower than our asking price. Sometimes we price our properties and there's only a $3,000 spread and it's just, I'm sorry, this is the price. There's a mortgage payoff or there's, some other circumstance, tax balance, debt against the estate, whatever the reason is. So there's only a reason why we had to sign it up here and it's, we're only going to make $3,000 on this as an assignment fee. Other times there might be $30,000, $40,000 spread there and end up, negotiating back and forth. Or sometimes that total $30,000, $40,000 spread is realistic and we even get a bidding war above that price. So where I'm going with this is when you see an investor sending a property out, like a wholesaler sending a property out, or even in MLS deals, if it's the right property in the right situation, which I'm going to talk about in a second, you got to make a freaking offer. You got to make an offer in order to engage in negotiation, and you can get a little, going back and forth and find out if there's going to be some reality there. I can tell you for a fact that since I've never signed up a deal exactly at the asking price, there's no way that I would ever do any deals whatsoever if I didn't get in there into the trenches and make an offer. And I know that like a lot of people, the most successful people in the real estate business have no qualms about making an offer that's too low, that's lower than the asking price, even significantly lower than the asking price. And there's a more delicate way to like dance into that and make a soft offer. As an example, we'll have buyers, if the price is $285,000, and I don't even know if that's good enough. Let's say my asking price is $120,000, and they need to be at $75,000. That's where they did the numbers. That's where they feel like they can buy the property. Not because they're trying to steal every property, which some people do, and they make outlandishly low offers. But for whatever reason, they had to make the offer at $75,000, and we're at $120,000 asking price. They would make the offer, a soft offer by saying something like this: Dan, I know you guys have this thing at $120,000. I'm not sure how much room you have in this deal, but I mean, I'm doing my numbers, and I'd be a buyer at like $75,000. I don't know if you can get, anywhere close to that number. Now, if I had the contract for $100,000, $105,000, I'd say, dude, I got it for $100,000, $105,000. There's nothing I could do there. If you want to be at $107,000, $110,000, depending on the deal, maybe we could do business. But who knows? Maybe it's a neighborhood where the comps are nuts, and I got that thing for $65,000. And no other offers come in. He says, Dan, I need to be at 75. I could say, well, listen, I could probably, if you could get up to 80, we'd have a deal. He scratches numbers and maybe we got a deal. But there's many deals that get done where there's a very wide gap for one reason or another from the asking price to the deal's final sale price. And a lot of times, the asking price, it's the seller's job. It's the wholesaler's job. From that side of the table, it's the seller's job to do his best to get the most amount of money that he can for the property. So you always got to remember that as a buyer versus the final sale price, which may be significantly lower than that. And another note on that, a lot of deals are done in this fashion. A wholesaler, even a real estate agent, has a seller or client at a certain price that was their quote-unquote bottom line up front. They did their best to bring the seller to the reality of the market, and then they sign an agreement or they sign a listing agreement at a certain price, and then the market doesn't deliver any offers that are anywhere close to what that seller or that client originally wanted and agreed to for that property. So the offers all come in significantly lower. So let's say that that price was $150,000, and we'll say, you know, the client, the agent or the wholesaler has that seller / client at a reasonable, ready to accept or signed up at $140,000. All the offers come in at 105, 110, 120, 125. Either the real estate agent goes back if it's a listed property, or the wholesaler can go back and say, listen, I can get the deal done and you're going to net out $120,000, so they can accept that $125,000 offer. So many times the initial asking prices, if you're the person who engaged in the negotiation, you're the one that wins that deal as a result of your willingness to engage in negotiation and make your offer anyway, even though the $150,000 was outlandish in comparison to, say, the $125,000 that gets the deal done. And the wholesaler, who originally has a property at $140,000 outlandish price, goes back to the seller and has a conversation about how outlandish the $140,000 is and how we can go to settlement in 3 days if you are ready to go at $120,000, which is really the value of the property by the time we enter in repairs, estimate the closing costs and the realtor fees, et cetera, et cetera. And, you know, the seller at this time is 2-3 weeks going by. Sometimes the wholesaler or the listing agreement and the real estate agency's, you know, terminology, that seller has been worn down by the market because they've been waiting for, say, 30 days. They've been waiting for 45 days. The settlement was extended or the listing contract is halfway over and this person thought they were going to blow their property right off the market. And the reality is that $125,000 was the reality of the market. And because you engage in negotiation and make that offer and you follow up and stick with either that listing agent or you stick with that wholesaler, there are many cases where you will make that deal. I know that in my shoes, I make that deal many times per month on properties that we've engaged in negotiation for periods of time as long as 9 months to a year. So a lot of deals are done in a matter of days or weeks, and a lot of deals are done over the course of 6 to 9 months. In my case, that's how long I'll engage in the negotiation. So if you're listening to this as a buyer, we're going to talk about one final qualifier, but you want to write down that you want to engage in negotiation on the deals that you feel you can make a deal on. So you kind of have a litmus test. For me, I found the litmus test to be this. I either am going to engage in negotiation on a makeable deal, or B, there's no deal, so I don't engage in the negotiation. And I'll give you a few examples of what would qualify as a makeable deal. For me, I'm looking for, number one, the right property, and number two, and or the right situation. So for me, the right property that would constitute a makeable deal would be a property that needs repairs. I'm a rehabber. I buy, fix, and sell houses in Florida, Chicago, and Philadelphia, and I'm looking for properties that generally need work, that need renovation. You know, if somebody has a property that's completely retail ready, and I'm talking like done to the nines, and this person has well maintained the property, and many times if that's the wrong property, I'm not going to try. If this guy's asking $150,000 and the property's worth $150,000, $160,000, even $170,000, he's kind of in the ballpark for retail, I'm not going to badger this guy to death with this $150,000 property at, you know, $75,000, $85,000. I'm just not going to do that. That's not a negotiation that I can engage in because his property is not the right property. However, his property or the original property that needs repairs may fall into the category of the right situation. So if he has a property and he's leaving the state, you know, if he's in Florida and he's got to move to Arizona for a job and he says, I just need any offer. You got to just give me any offer whatsoever. I'm not renting this place out. I'm leaving town. You know, for him, the situation is right to engage in negotiation. There's a chance that somebody with that fixed up property, you know, may decide to accept my offer of $75,000, $85,000 on a $150,000 property for cash for the convenience that the situation or the convenience of the offer that I provide. So the right situation, a lot of times people are going to need to sell property after the properties have been inherited. If they're facing a foreclosure or a tax sale, I know I can come in and I can pay more money for a property than what the tax bureau or what the tax sale is going to net that seller, and that seller can move to make a solution, on their property on their own terms by utilizing a company like ours. And they're going to make more money from us than if they were to go down and go through the tax sale process. So engaging in negotiation would be to engage only on the makeable deals. And I'll give you like one word before we start to move on. The makeable deals, almost all, well, I don't want to say all wholesalers because there's a lot of people that send around some deals that don't make sense. But the wholesalers who are moving property on a regular basis, oftentimes it's worth engaging in a negotiation on those properties that fit what you're looking for, especially if it's in the right neighborhood. A lot of times there's a chance they can move the deal at a certain price that's significantly less than the asking price they have on their property marketing websites, etc. And remember, if you don't engage in negotiation, then you don't do a deal. So no negotiation equals no deal. Number 3, my third jewel of wisdom here. This was one that I learned over the course of the last 10 years, and that is to master direct-to-seller deal making, and you'll always make money. I had mentioned earlier my book, Become a Wholesale Real Estate Master. I know a lot of you have already listened to this in the audience, or rather read that book. I'll include a link in the show notes at reidiamonds.com for the download for that if you'd like to get a free copy. It's also on Amazon. I talk about all of the different skills in the entire process for developing the skills to master direct-to-seller deal making. What I mean, though, is that whether it's a hot market, a cold market, like deals, your deal source, if you're a source of deals and you've developed this, there's places to do deals in any kind of market. So I made a mistake when the market crashed in 2007, 2008, and I didn't shift gears, and the market shifted to a place where short sales and developing, new methods of doing business and marketing to handle the short sales was a significant source of deals, and I completely missed that. I just kind of sat out on the bench. So in any market, there's definitely, when you become a master of doing these deals, you're going to do deals no matter what type of market environment you're in. Some of the skills of that, which are talked about in the book, Become a Wholesale Real Estate Master, include direct marketing, negotiation, market analysis, and obviously relationship building. The cash buyers who are in the market right now, circa 2016, at the time that I am recording this, are doing a certain thing. They, if there's a market change and we have huge catastrophic changes in the market like we saw in 2010, 2009, they're not going to be the same cash buyers who were in the market at that point in time. So you're going to need to develop, obviously, that skill of relationship building in order to master direct-to-seller deal making and always make money. Number 4 is learn to add value. And this is one of the jewels of wisdom for me that I'm going to take a couple different directions here. Number 1, you're adding value to property. Obviously, that's kind of what makes sense. We buy a property that needs repairs and we renovate that property, we fix it up, and or buy a property and increase the rents. So you buy an apartment building with undervalued, under market rents, and you renovate a few of the units, or not, if that was just a mismanagement issue. Increase the rents and therefore increase the value and make money in real estate by increasing the value of the property. Now, also, especially for like new people, I'll explain some of the things that I've done and made a decision to do over the course of the last couple of years, which helped to, build my business. I add value to my network. And one of the ways you could do this, I do this with the REI Diamond Show you're listening to right now. I also run the Real Estate Investor Networking Groups. That's the Ring meeting in Philadelphia and Chicago. That's www.ringchicago.com or ringphilly.com. And I'll include those in the show notes at reidiamonds.com. And also, I add, obviously, the most amount of my value to my network by providing off-market deals. You can check those out through the deal link at reidiamonds.com. And obviously, I wrote the book on wholesaling. I give that away for free when people sign up for the REI Diamonds Saturday new episode notification email. And what ends up happening, I'm giving away the information. I'm teaching people wholesaling, and my team in each city that we operate is ready to kind of help people who bring deals to the table. So if somebody reads the book, they start to find and dig up addresses and people selling houses. We'll actually step in and we'll help with the negotiation because we have, 10 years, 15 years plus on the team or more of market analysis. Plus we have cash lined up to buy the property. So we kind of make it real simple for a lot of new wholesalers getting into the business because we give the information away to begin to build a wholesale real estate business. And then we step in and actually help the deal get closed, whether that's putting the contract together, clearing title, buying the deals ourselves, bringing a buyer to the table, helping with negotiation on the other side. So that's a couple of the ways that I build value from my network. If you're just getting started, another way that I try to build value for my network, I provide information on what I do, right? So if somebody I can make a connection to or make an introduction to, who I feel like I can add value by just connecting the two, sometimes it's deals. There's times, like I said in the beginning, I don't really do too much of that cold wholesale business. And there's times when, I'm on a lot of different buyers lists in a lot of different markets. And I might know somebody who's kind of interested in a certain neighborhood and a certain place. I'm just going to forward the email along. You just call that person and go ahead and I'm like a believer that if I send that out, I'm just kind of making a connection. I'm sending that value out, and I'm sure that there's times when people have sent my deals out to other people as well. So making the connection for people and offering some of the resources like that. There's occasions where, people on my list help me out by sending me connections for clean out companies or painters. If I'm needing something, I will email something like that out to my list, and they'll connect me with somebody in that neighborhood who has at least done some work for them. So that could be a pretty cool way to add value to your network as well. Creativity is valuable. What I mean by that is, number one, the structuring of deals. I'm not going to get into the creativity of structuring deals, but I had 2 episodes I just recorded with Jeremy Ricci and Larry Steinhaus. And I'm going to include show notes for those as well, links to those shows. And there's some very creative structuring of deals, like subject to mortgage takeovers and seller financing, in addition to just making a cash offer like I talk about in the book that I wrote. And then also, creativity is valuable when it comes to the use of property. Could be creativity in designing the kitchen and the bathroom. I'm not just necessarily talking about taking, a house in a $100,000 neighborhood and spending $25,000 in the bathroom, but there's ways to put the building materials together and choose the right tile and choose the right tile inlay, backsplash for the kitchen. Maybe there's ways to lay out the cabinetry and the kitchen design, to do things with the landscaping out front of the house. A lot of these small creative pieces will help a property move. So you give it some more curb appeal, but not necessarily spending a tremendous amount of the budget on these items, but addressing each of these items in your renovation. Creativity for the property, creative use of the property could include building an addition. When you get into new construction, not something I'm a master at or an expert at by any means, but you could decide that, the level of creativity you could bring to a brand new house or a brand new subdivision or perhaps a mixed use development like they're doing with the Granite Run Mall right now. There's a high level of creativity that's being put into tearing down the mall property and redeveloping the mall property. I believe it's a Toll Brothers project with a mixed use development, a lot more walkable space. There's going to be apartments. There's open air. There's retail that faces the street so you can see the signage, whereas the mall has died as a function of retail at this point. And what if you have no money? How can you add value? Obviously, like I talked about already, you can add value by being a source of deals. Maybe you're good at construction or property management. Maybe you're just fantastic at placing tenants or getting property sold. There are, even though I don't care much to build or tell people to go and get in the cold wholesale business, there's people who build up great relationships with buyers and their buyers list, and they help a lot of other people get their property sold, or real estate agents who have built up systems and they've built up, buyers who trust them and they get property sold. So, if you're coming into the business without money, these couple items here might be something you can do to add value, or you can begin to master some of those crafts to add value in the business. and funding partners. So let's talk about if people have money. How do people with money add value to the network or add value to the community? Sometimes there's people who just have some money that they want to invest, but they don't necessarily want to run contractors and worry about, contractors ripping them off or like hollering and yelling and negotiating for every last piece of the deal. So many passive investors just add money to the deal and they link up with rehabbers like myself and fund deals, and they make, solid percentage rate of return, 8, 9, 10, 11, 12% interest on their money that otherwise would be sitting dormant in a bank, and that's how they add value to the community. Let's say you have money lined up to buy property, and you're wondering how you can add value to, let's say, agents, a wholesaler, the community at large. It doesn't take a huge marketing budget the way it takes for a wholesaler to be in the business. A successful wholesaler needs to reinvest 60 to 70% of the money that they're making in marketing to continue that stream of properties coming in the door. I'll share a little story here. One of my VIP buyers who has developed a relationship with me, this is who I was talking about in the beginning, who I had done the first couple deals with. The VIP buyers that I work with in my network, they think of themselves, and I think of them as partners to me, to my organization, to the 6 of us that comprise Diamond Equity Investments. My buyers are literally, in a sense, my partners. My best buyers will think of themselves like a partner of mine. And what I mean by that is when we get to the settlement table, there's not a price on the HUD and an assignment fee on the HUD, like they're going to pay the assignment fee as though they're buying me out of a partnership and 1099 me for the money at a later point. So what happens when you buy a property from a wholesaler and you beat the wholesaler up on the front end? You beat them up real bad. You get them down to a $3,000 assignment, and you probably should have paid 10, and he was asking for 13. But you're a better negotiator, and you walk all over the guy and you get the better of him, right? It's a real short-term perspective that I'm talking about here. And then you turn around and you have a bidding war, and instead of making $42,000 like you had originally done your numbers, the bidding war drives it up and you make $55,000. What's your next step? How do you think that wholesaler will feel? Because the wholesalers do this. They'll go back and they'll check to see what that property retailed for on the other end. How does that wholesaler now view you in the market? Is he viewing you as a partner, as a great resource after you beat him up and bludgeoned him down to a $3,000 assignment fee? On the flip side, I get a call yesterday, a situation like this had unfolded, and my buyer, we negotiated hard originally up front. We had to negotiate a $10,000 assignment fee on this deal, and he built the deal on a $165,000 sale price. And then the sale price, it was listed for $189,000, and there was a bidding war, and it went up to $2,065,000. Now, granted, he spent about $90,000 on the deal, and he thought he was going to spend $65,000. But he built the deal on $165,000. We sold him the deal for $55,000 with the assignment fee. And then the $206,000 offer after the bidding war, it falls apart. They changed their mind, whatever the situation was. He has to put the property back on the market. He thinks to himself, well, why don't I put this thing at $199,000? I mean, I got this outrageous number the first time. What if it's just worth more money? And then he put it on at $199,000, got another bidding war. The property ends up settling at $220,000, and he made more money than he originally anticipated on this deal. And what he did in this situation was pick the phone up and call me out of the blue and basically puts me on notice he's going to be sending me an extra $5,000. So it's like, how the hell will I ever call anybody else in front of him for a deal, right? This is from my perspective. That's the level of partnership, that exists between my number one guy and my organization in that market. So you just may want to think of that thing. How can I add money to people? Even if you're a buyer, it may not necessarily be the right way of doing business every time I'm not necessarily suggesting you go back and pay all your wholesalers extra money. But if you got a star guy and you want those deals coming in first, you might want to find some additional ways to add value to that wholesaler's life. And like a real estate agent. So real estate agents in my network, typically they can add value by doing this. So if I have a property for sale on my site, I typically try to price them, appropriately and try to market them to my list, and then I do some other things to market them at a later point. But the first thing that an agent could do is, if an agent has a buyer, this is the best way that an agent has ever approached me. Say, Dan, I see you got this property. It's at 123 Main Street. You got it for $70,000. I know the neighborhood. I know it's a good deal. I'm 95% sure that my buyer is going to take that. And what I'm going to do, because I know, not to be an aggravation to you, and I see that the property's not listed, but you want $70,000. I'm going to have my buyer pay on my commission on top of the $70,000. Fair? That's great. That guy has an inside track on anyone else who wants me to pay on the inside because he's sweetening the pot for me. Now, will I pay real estate agents commissions on the buyer side? Like I said, I would on 90%, but there's certain ones who didn't try to always come onto my side of the street with that, because I would price them, I might price them a little higher and put a deal on the MLS if I'm going to sell the property through an agent. Real estate agents can bring buyers off-market deals before the listing, or they can give them the inside track and say, hey, I got this deal, such and such, they want such and such, you want to come by, give me an offer on that, and then typically the agent would receive the commission on the flip side of that deal. That's not the case. It's not a law. That's not the case in everybody's, mode of operation. But nothing's better than getting a phone call for a deal before it's listed on the MLS and then bid up or shuffled through as junk before the deal is finally done. Real estate agents could add value to your investor clients by sending pertinent articles. Pennsylvania, we had the Pennsylvania transfer tax laws changing. Illinois, there could be any variety of legal real estate news. I'm not talking about sending the regular Keller Williams newsletter or the regular, the regular Century 21 automated newsletter subscription. Talking about something that's actually pertinent to that investor in that market. 8 hot neighborhoods in Chicago. That's a cool article. You could send that out. Investors want to keep in touch with certain things like that are developing. If you come across a cool podcast episode or a radio show episode that's pertinent to that investor, you don't have to bombard them with every episode that you hear, Bigger Pockets or, there's tons of local real estate radio investment shows in every market. But if something is pertinent to your investor, forward a link along. Tell them this is something cool. You add value like that. You find little ways and people will remember your name. That's like one way to kind of like keep top of mind presence, certainly as a real estate agent. So the fifth jewel of wisdom here is the importance of relationships. And I've talked about this on other episodes, and this is something that's very important to me and that I hold in high esteem. You have to learn, if you have not already, and I'm sure a lot of people who are listening to this have already figured out how to do this, but when you recognize a high caliber person, you see somebody who's doing something special, who's made sacrifices in their life, and they've maintained certain level of focus to obtain the skill set and the working habits. And this could include companies. It could be a high-caliber company from the top down. It's just a great organization of people, and I know a lot of the Keller Williams agents are like this that I've had the pleasure of doing business with. I'm not being paid or sponsored or anything like that. And when you find high-caliber people, individuals, a lot of times they're busy, but maybe there's ways that you can add value to them. So, people add value to my life and my business by bringing deals to the table. Sometimes we're bringing buyers to the table. Sometimes, we're coming out to the ring meeting. We have sponsorships available at the ring meeting. So a lot of times we have great companies who come out and help to produce the networking event each month. And you want to protect and nurture those relationships. You don't want to tell somebody who's in a high caliber performer, if you say you're going to do something, do it, get it done. Maybe you figure out other ways that you can do business and that person can make some additional money by, working a separate business model, that you might have come up with. And they aren't going to say yes to every piece, but certainly, if you can include them in your plans in some way or another, and it's valuable for each person, then obviously that's a great way to do business. Important relationships. I mean, we could be talking about real estate agents, lenders. That could be institutional lenders, private lenders. We're talking about, certain mortgage providers that I consider, high caliber people in numerous markets that I have. Great contractors who do what they said they were going to do at a reasonable price. I mean, that's worth their weight in gold in the real estate business. I have great wholesalers in my market, in my business that, that just know how to find good deals, know how to negotiate good deals, are trustworthy. You have great title agents, great attorneys, the list goes on and on and on. And then my sixth jewel of wisdom or lesson is the importance of saying yes and the importance of saying no. So
there's someone in my network who has said yes to multiple scenarios and business ideas and little methodologies and systems and put his team to work with my team, and we're making money. We're doing business right now, and I'm excited for the future, and I know that we're going to grow this thing into something, very substantial. And this is over the last, I'd say, 6 months or so. I've offered this relationship to numerous brokers throughout the Chicagoland area. I actually had 2 people say yes at the same time, and I had chosen the one individual because he said yes first without hesitation. And I think that's important for people to realize that sometimes it's very scary to say yes. And I'll give you an example. Buying a rehab. Many of the deals that we close on, we don't know if it's going to be the one that we get a bidding war that bids the price up, or we're praying for a single bid 6 months into the rehab. There's some indication of whether the neighborhood's hotter or not. And we know that the neighborhood's hot, but sometimes you just can't tell. Saying yes can be a scary, scary thing. So the importance of knowing when to say yes is one aspect. Even when I sign a contract on a deal, there's many times when it's like, I don't know if this is really going to be a good deal. I'm not sure. And every once in a while we get the numbers wrong. I've lost money on deals. I've lost money on 2 deals, 3 deals in the last 3.5 months. It just happens sometimes. So saying yes to the next deal after you're losing money on the first deal is sometimes a courageous act. It's bold. It's consistent. It's the thing that somebody who's successful does in order to get to the next step and make up for the loss on that last deal. And, if you're newer and you haven't contracted the deal yet and you're negotiating with the seller and all of a sudden they're ready to sign a contract up, you're going to have a thought go through your mind. Oh my God, what if I can't get this closed? What if I can't find a buyer? What if I got the numbers wrong? And you have to say, yes, I'm going to do the deal. Yes, I'm signing the contract. And if you're buying a rehab, you're going to have that same, number of things go through your mind. They still come through my mind 400 deals later. Oh God, what if the sewer line's bad? What if we find, termite damage in the walls? What if I misread the comps? And what if this section of this neighborhood is not quite as good as that section right across the way? I mean, what if? But I have to say yes in order to get to that next step on my path to success and making money in the real estate business. But then on the flip side, and I included this in the same one, would be saying no. What if you're contracting a deal and the number's just too high? What if you're above your line? Like sometimes you're wanting to pay $60,000, you'll sign it up for 62, and then there's other times where $60,000 is the top end of your range, and you got to say no. You can't do 61, 61.5. You can't even do 60. There's times I've told sellers I can't do $60,100. Like it's no deal at that point, and I'm able to say no strongly, and I'm able to hold my line. And in that sense, saying no can become a negotiation tool. There's times I've had buyers, on my deals, and they said, no, I'm not interested. And, if it was a different number, and give them a different number. Next thing you know, I lower my price to try to entice an offer, because a refusal to negotiate sometimes could be a problem for me. If a deal is just too much risk, if a business partnership is not working, you have to say no. And you have to be strong even when that business partner wants to come back around and promise another great deal, and he's going to promise the world and, things are going to get better. Ultimately, saying no to certain relationships, to certain, contractors. I've had to say no along the way to many deals and many people because it would just put too much risk on the business and on my partnerships. Number 7 is a little bit of a personal development piece. My 7th jewel of wisdom is to live a high quality, high caliber life. And what I mean by that is I've developed some things, some mindset shifts that I thought I'd share with you on the podcast here. Over the past 4 years, I've decided to live a more healthy lifestyle. I quit smoking cigarettes. I quit drinking alcohol 4 years ago. I joined a gym. I mean, this all happened within the period of, 2-3 months, all these life changes back then. And at the time, I was doing a little bit of business, a wholesale deal here and there. But, it is nothing like my business is today. And I chose that healthy lifestyle, and I began, eating better, making better choices with that. And I feel like as I power my brain with nutrition, exercise, and even over the past, 2 years, meditation on a regular basis, I feel as though I've become more effective, more capable of making decisions quickly. I feel as though I've prepared my body and mind so that when the stress comes of a deal, or when a decision needs to be made, or when I need to stay up late to get something done, or when I need to lay out my goals on a regular basis, like, it seems as though there's a correlation between my decision to live a healthy lifestyle and my actions, and like pushing out, some of those unhealthy things that I had up until that point in my life, opened the way and developed my mind and body in order to become better at what I do in the real estate investment business. There was no way I could write that book. I mean, it was 165 pages. I wrote and edited that book and laid that book out from outline to end. And that took 4 or 5 months, to get to that point. And it took a lot of clear cognitive thinking, and it took commitment and dedication in order to get that done. And none of that would have been possible if I had to keep stepping outside and smoking a cigarette for 10 minutes, each cigarette times 10 to 20 cigarettes per day. If I add up 10 minutes times 20 cigarettes, that's 200 minutes in one day. I mean, just some quick math, 200 minutes times each day times 365 days a year. Like, I wrote a book in that amount of time, and that book has changed people's lives, and people are doing deals as a result of what was written in that book alone. They're even doing deals with me. They're doing deals with other people. I mean, that book literally was written in the time that I used to invest, quote unquote, or waste, standing out front with a cigarette in my mouth. So just the time alone that was freed up, and the centered, balanced reward of making those decisions has created a much more peaceful, centered, calm, and abundant life for me and my family. I was on one of the previous episodes here. I think we had talked about that on that episode with Josh Hertz, and I'll also put a note in there. And it may have been on a conversation with him in the past, but I remember him saying something, and I was wholesaling, and I was doing, 3-4 deals a month, and I was making good money at the time. I was flipping properties at the time. And I remember he said something like, I sat down and I decided, if I'm going to be the best at something, and I'm going to be the best at wholesaling, and this was like after he had started doing, 10 deals a month. Like, he was doing a lot of business at the time a few years ago. He said, I decided I was going to be the best. And I thought of this. I said, wow, it's pretty interesting. And he actually decided that he was going to be the best. The thought never crossed my mind to go out there and be the best wholesaler that I can be. Like, it just never dawned on me to go out and be the best at something. And then as I read and heard stories and articles and podcasts and, Sean White and a lot of the people that come on the Tim Ferriss show, I began to hear a common thread of this methodical approach, this decision to be the best at what they were doing, and then finding out the path and the way to be the best. And I guess I made that decision right around that time, and that was like 3 years ago, and I've developed just such an intensity in my business and putting together my marketing and doing my follow-up and working on the website and following up with sellers and, running the ring meeting and traveling back and forth from Philadelphia to Chicago. All that, had come as the results of making these decisions along the way to be the best I could become for me at what I'm doing. It didn't happen by accident. It doesn't happen by accident. And I'm not saying, there's some people who are the best at what they do listening to this show right now. And there's some people who are going to decide to become the best. Right now they're going to say, oh my God, they're going to have that same epiphany that I had and say, I'm going to be the best rehabber. I'm going to be the best at new construction. I'm going to be the best real estate agent I can become. I am going to be the best at what I do. And they'll make a decision, and the actions will come. They'll make a plan. They'll decide quickly. They will move forward, and they will become even better and have, at least for me, I know the experience for me in having that thought process and that shift was that my life is completely different than it was 4 years ago as a result of those decisions I made. My eighth and final jewel of wisdom is that money loves speed. When you can do things fast and get shit done, you're going to make more money. Everybody I know that's busy, they're super busy, they're getting things done. All, the high caliber performers that I have on my team, that I'm blessed to have on my team, they got a lot of stuff going on, and there's no room for procrastination in success. You can't wait till tomorrow. You can't wait until, I'll do that tomorrow. It's on my to-do list. When I have that kind of mentality creep in, and it's still a constant battle with myself to procrastinate, my income suffers as a result of that. And not every idea that I come up with is a winner. I fail a lot. I send a lot of mail campaigns that get zero, absolutely zero. That cost me $1,000, $2,000. I get zero calls back because the idea is just a big fat dud. I put a lot of work, a lot of effort into some of those ideas, and when it doesn't work out, I've learned to not be offended or not let the failures hurt the way they did in the beginning, if that makes any sense. So money loves speed. Make decisions quickly. Act quickly, kill procrastination. I have a decision exercise I will leave you with on this final jewel of wisdom here before I get to the final question that I'll ask myself. In order to decide and make faster and better decisions, and I know you may be way past this point, or you may know somebody who should practice by doing this. For me, I remember a point when this decision exercise was taught to me in 2006. And you've probably been in a restaurant and you're out with a friend or a couple friends, and everyone's like, well, you didn't even get to the restaurant yet. And it's like, oh, you want to go get something to eat? Yeah. Where you want to go? Oh, I don't know. Where you want to go? Oh, let's go. I don't know. Where you want to go? And no one can make a decision. Or you get to the restaurant and nobody can decide what they want to eat. All of a sudden taking time, and maybe you're the one that's taking a ton of time to figure out what you want to eat on the menu. So like my exercise to begin a process of consciously making decisions and making decisions faster and more confidently was that every time I would go out to eat, I would find something on the menu and I would order fast. And I would make sure that I had my order ready before anyone else at the table had their order ready. That was my goal. Look, I got to decide what I want to eat fast. And for a while, that basically just meant that I ordered the same thing no matter where I went. But then I got better at making the decision and trying to avoid all the distractions or whatever comes up that causes people to decide so slow. And I would just decide to eat something on the menu relatively quickly. And then I began to make other decisions. So even in the course of my business today, I make a lot of decisions as far as offer prices, signing up a contract, offer ranges, who am I going to use for the contracting, how much is a fair price for the contracting. There's many, 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 many decisions. And in a sense, I've been able to develop that ability to make decisions, and it seems to correlate with, the number and amount of deals that I get to participate in today. So I'm adding a new question that I'm going to be asking the new high caliber performers that come on my show here. And that question is, what advice would you give your 18-year-old self? And for me, I was 26 years old when I got into real estate. So if I had to tell myself at 18 years old, because I read my first real estate book when I was 17 years old, turning 18, I literally was in the middle of the book, halfway through, and I would tell myself that you can get into real estate with no money. There's a way for you to get into real estate with no money, but the most important thing for you to realize, Dan, at 18 years old, is that you have to get knowledge. I'm not talking about read one book and think you got it. You got to read a book a week until you figure it out. You got to take lunch meetings with people who you're uncomfortable taking lunch meetings with until you got it. You need to make uncomfortable phone calls and make many meetings, many different conversations with people where you're going to look stupid and feel stupid until you got it. But get knowledge. There's nothing going to be more important than figuring out the ways and the methods, the skill sets, making the connections, and figuring out all of the skills that you're going to have to put together, because that's way more important in the real estate business than money. A lot of people getting into the business think, oh, you got to find money, or you got to have some rich uncle, or you got to have some guy that owns a business that's going to invest in you, and they're going to fund your deal before you can go out there and look for a deal. And that's probably one of the biggest myths in real estate. And even to this day, like I said, my number one jewel of wisdom is the source of deals, being the source of deals. So that wraps up my 8 Jewels of Wisdom episode. I hope you have enjoyed this, my loyal listener, and thank you for continuing to tune in to the REI Diamond Show. Do you know anybody else who invests in real estate or wants to invest in real estate?
Do you think they might enjoy this episode? If so, send them a link and tell them they can sign up to receive new episode notifications at reidiamonds.com. As a bonus for signing up, I'll send you my special report called 7 Sources of Off-Market Deals. I am also including the 164-page manual that I wrote, Become a Wholesale Real Estate Master, which in essence, that's basically the business plan I wrote for diamond equity investments. So if you're interested in either of those 2 things that I wrote, go to reidiamonds.com. And once again, thank you for listening. Dan Breslin here. I'll catch you next time. Remember, here at the REI Diamond Show, we're dedicated to increasing and protecting your net worth.
Thanks for listening to the REI Diamond Interview. To receive the REI Diamonds newsletter and interview monthly, sign up now at www.reidiamonds.com.